Hello and welcome to the latest episode of Millennial Money.
So this week we're actually going to talk about what the best way is for you to buy a car.
But before we go on, we've got to just look at Lauren's shoes. She's been in the office with her. What colour is that?
Burnt orange. Primark special.
Is it? Yeah. Well, burnt orange shoes. I've never heard of burnt orange. Anyway, back to the money stuff. So last week we talked about car finance. So if you go and buy a car from a car showroom, for example, they can offer you finance to help you buy it. So there are three main types. There's PCP, hire purchase and PCH, which are three that we spoke about last week, as I said. Now, none of those actually allow you to own the car outright at the beginning. You can own it at the end of some of those. So there are other ways to buy a car. Now, one of the most obvious is cash. So if you go and buy with cash money, then the benefit of doing so is that you actually own the car outright. So the other way is you're actually just the legal owner if you have finance for a period of time, but you own the car outright. So if that's important to you, then cash is obviously the way forward. But cash is one of those things you've got to have the money in the first place.
Yeah, and also cash is actually the cheapest option because you won't be charged any interest. So the value of the car is how much you pay. Obviously with other ways of financing a car, if you pay for finance or a loan, for example, you will get charged interest over the period that you borrow the money for. So cash is also the cheapest option.
So you can go and get a low interest loan, so an unsecured loan, but what will likely happen is they'll ask you why you want that loan, and you'll only be able to get the loan over a relatively short period of time. So depending on the value of the car, while the interest rate might be lower than, say, if you bought on a credit card, you're going to still have some hefty monthly payments because you're going to have to repay that full loan within a, say, 3-year, 5-year period. As I mentioned there is, of course, buying on a credit card, which is never really a good idea because unless you've got a 0% purchase deal on your credit card, you're going to be paying some hefty interest rate charges, with the average interest rate for a credit card being up towards 18% APR.
However, one thing to bear in mind if you do buy on a credit card is you will have that extra protection of the Section 75 of the Consumer Credit Act.
Yeah, so that means if you bought a car and say the car company went bust or disappeared and didn't actually deliver the car, then you can make a claim for your money back from the credit card company. If you want more information on that, we can do a future video, put a message in the comments and we will do that in the future, or ping us an email. Now, of course, there's others, banks of mum and dad, friends and family might give you loans, but the only problem with that is you're going to have to pay them back. And speaking from personal experience, loans from family doesn't always work when it comes to cars, because then you end up having to either repay that loan. If they don't repay the loan, you don't want to have somebody come around and repossess the car off of you that you know.
And also another thing to bear in mind, if you do get a family loan or a loan from the bank of mum and dad, you have to pay inheritance tax on that if the family member dies within 7 years of giving you the loan and you haven't paid the money back.
Yeah, so that's an interesting point Lauren raises there, because if somebody gives you money, then it can have inheritance tax implications. If someone loans you the money, then that loan goes back against their estate. But it's something not to get bogged down in, but it's something to bear in mind in the future. Now, of course, other people may be thinking, what about peer-to-peer loans? Well, of course, that is another possibility. It's a form of lending that kind of cuts out the middleman, really. So there are some cheap loans out there on peer-to-peer. But overall, the best way will always remain cash if you want to own it, but you don't have the consumer protections that you have with a credit card. Yes, if you pay with a debit card, there are some kind of protections out there, which is called chargeback protection, but that's something for another day. Personally, my own journey that I've had through life and buying cars, I've tried nearly every one of the methods we've talked about in the past. The best one was actually buying a second-hand car, because if you buy a new car, all that depreciation that you have, as soon as you drive it off the forecourt, you lose thousands. If you buy a second-hand car or nearly new car, someone else has actually already paid that for you. So you could buy all those cars cheaper and you don't have a monthly amount coming out of your bank account each month. And also that is a benefit. If you want to try and take a loan or mortgage out in the future, then you won't have a fixed amount coming out of your commitment coming out of your account every month. If you've bought it outright for cash by buying a cheaper second-hand car, then that is actually a positive if you want to try and take out credit for something else in the future.
Yeah, the other thing to bear in mind is obviously the best way to buy a car actually varies on your personal situation. So like Damien, I tried to do that, with the view to having a mortgage in the next couple of years, and I bought a second-hand car, and within 4 weeks of owning the car, it broke. And then there I was stuck with this loan for a car.
I'm not laughing at, right? The only reason I'm smiling because we've lived through this with Lauren, and we had that thing of where she bought a car and it didn't work, oil and all this kind of stuff, and it was kind of a friend of a friend, and it was with cash, and it all worked out in the end. But the point was, when we chatted about it, I had a similar situation many years ago, but I bought it from a dealer. And okay, I may have paid more, but the fact was, when they sold it to me, I had quite a lot of consumer protection from buying that car from a dealer, that they had to actually rectify it, because obviously I could take it back. When you're buying from a person yourself that you might be a family friend, then it's a very different situation. So as Lauren says quite rightly, it's horses for courses, and you have to bear that in mind.
So that's it for this week's Millennial Money. So thanks to those of you who sent in questions. If you have anything you'd like us to talk about, please email me at lauren@moneytothemasses.com. As usual, head over to our social media channels, our Facebook, Money to the Masses, our Instagram @MoneyToTheMasses, and our Twitter @MoneyToTheMasses with the number 2. And please subscribe to our YouTube channel. Thanks very much, and see you all next week.